Hi everyone, it's Derek Armstrong, and welcome to today's Logo Quick Take. It's Thursday, January 15th, 2026. Earnings season has begun, and over the next 6 weeks, reports will be coming fast and furious. First up, Taiwan Semi, one of our favorite alpha brands. We've done a number of videos talking about why we love Asia exposure in general, and TSM's report just reinforces this view. Here's the highlights that matter. 1. Solid revenue growth, $33.7 billion, up 39% year-on-year. 2. They raised 2026 guidance. Revenue growth of 30%, CapEx of $52 to $56 billion, and a revised 5-year AI growth catalyst with compound annual growth of mid to high 50%. 3. Massive step up in the CapEx guide because demand is insatiable and supply is still scarce. That drives significant pricing power. TSM's business is booming, and there's incredible visibility. All of this with the stock trading at a still undemanding multiple, likely due to the geopolitical risk embedded in Taiwan stocks. Here's the really interesting data point. When asked about power grid constraints, which has been the key growth limiting factor for AI, the CEO responded that hyperscalers began planning power infrastructure 5 to 6 years ago. Silicon from TSMC is the real bottleneck. This confirms TSMC's position as the sole constraint on AI infrastructure deployment. Unlike power, cooling, or real estate, which have multiple suppliers and solutions, leading-edge semiconductor capacity is concentrated in a single provider with multi-year lead times. That creates great pricing power and assures demand will last for longer given the bottlenecks. In fact, TSMC implemented 3 to 10% price increases on advanced nodes effective January 1, 2026, confirming the continuation of pricing power into this year. How do we know this pricing power will last? For AI accelerators, NVIDIA, AMD, Google TPU, Amazon Trainium are the primaries. TSMC commands 95% market share with no viable alternative that required scale and performance. Plus, Apple's A-series and M-series processors are fully committed to TSMC's roadmap through at least 2028, with multi-billion-dollar co-investment in process development. Switching costs are prohibitive because of the 2 to 3 year design cycles, which means any decision to switch foundries results in multi-year product delays and billions in re-engineering costs. This moat is like few others. I'll be back with more earnings quick takes soon. Thanks for listening.